Good morning, everybody. It's Mark. We're back here for the morning call. It is Friday, I think December 14th. So we're getting close to the end of the year, about 2 weeks away. Still, fiscal cliff is on the top of everybody's news. It's obviously on CNBC every single day. The senators and congressmen and the politicians alike keep posturing every day with news conferences. It's creating a lot of indecision in this tape. And this indecision, quite frankly, you know, I still think there's an underlying bid in this market, but this indecision is just getting very old, I think, for a lot of people. And it's making the market quite stale. It's keeping a lot of people away. Lack of liquidity, lack of volume, and you just have to respect what's happening. So the trades that are happening slower, and a lot of times the trends last a lot less. So you just got to respect what's going on. It means, you know, less risk at this time across the board, and we'll go from there. So looking at the overall market, I look at the spider chart. 2 days down, nice pullback after obviously a week and a half move, which is expected. Not oversold anymore, not overbought anymore. Relatively flat on the advanced decline line. What are we going to do? I don't know. If you look at separate industry groups, the banks are hanging in there. Commodities, oil stocks, okay. Gold stocks, silver stocks, not so good. We definitely have a mixed bag overall. Right now, if we have one more day, I don't think we get below the 21-day moving average, which would be about 141.72. So keep that as a gauge if we do have another downturn in the spider chart. And if not, I don't think we're getting a whole lot of lift either yet. So this indecision is here for us to stay, unless, of course, there's some resolution, and I don't see that happening today or in the near future. But we'll have to wait and see. Qs, same type of chart, a little weaker than the spiders, but at the same time they're trying to find a base, possibly a little bit of a cup and handle to move itself higher over time. We're just not there yet. We need more time to digest this tape. Selective stocks. We'll talk about Apple. We always like to talk about Apple. It's down $10 this morning. It's almost doing, quite frankly, the opposite of what it did on the way up. Every single day on the way, in the uptrend, it would just be gapping up $3, $4, $5. These days, it's gapping down $5, $6, $7. Today, it's down 10. 505 is obviously that previous level. See if it holds support. My opinion, if it holds it, it will not last. It seems like we're going to go a lot lower. And let's pull up the weekly chart just so we can see what's happening. I mean, I wouldn't be surprised minimum to see the 100-day, which is 470. If we break that 500 level, it will happen quick. And you're possibly looking at maybe 440, 430 is in the card. So we'll have to wait and see what happens. It's definitely a bearish looking pattern overall, but it is Apple. So you just have to understand you're going to have $20 trading ranges accordingly. Right now, 505 is that key level, at least initially. 500, psychological level, breaks 500. You're going to get some more selling across the board. Google gapped up yesterday. Didn't hold that gap really, quite frankly, almost filled the whole thing. Maybe it was the tape, maybe not. See if it can hold 700. Ideally, you'd love to see it close above 704 for it to trigger long, to try to begin to fill that gap to the upside. We're not quite there yet. It still looks good. It's still a healthy looking chart overall, but I don't love that action we saw yesterday. You got to keep it tight. Amazon, it's almost become untradeable from a day-to-day perspective. Obviously, from a little bit longer perspective, it's hanging in there. It did break 250. I was saying 250 to 255 is the trading range. It did break that for a minute the other day, but didn't really stay below there. Quite frankly, right back in its trading range. Needs some resolution. I'm basically just staying away until, with authority, either gets over 255 or below 250 again and can stay below there. Then I'll put on some new shorts. But until that point, it's just a watch and wait and see. Hig-beta really is just not really reacting well in this tape. You have some big gainers, i.e. Priceline, on a downgrade was down $35 and has had 3 to 4 or 5 days down. Broke the 200-day moving average yesterday and closed right at it. Not a great sign. Technically, it is weak. Understanding 5-6 days down is not really where I look to short. Possibly a buying opportunity, but technically, again, a pattern that is broken and needs a lot more time. And that's quite frankly where we're at. Netflix, a stock that I think a lot of people love to trade, but it's very difficult from a day-to-day basis. Technically looks good. It looks like $100 is in the cards. How it happens, not going to be the easiest, but it's still intact. We were talking about at 85 the other day, and it moved to new highs today. It looks like hundreds in the cards, but I think it's really moving up with the 8-day moving average. So look for a pullback to 87, 88 as a viable opportunity if you're involved in that. RIM has been one of those stocks I've been having on the radar for a long time, guys. It did that move yesterday. I got out of my entire position. I thought 14 was my year-end target, 13.50 to 14. It did it in 3 days, and you know what? It's enough for me to take some off. I think it still looks good, and you have CNBC guys saying it still, looks great and all that stuff. It just moved a big percentage move. I would take a lot of risk off and have a trailing stop at this point in time. If you were involved in the trade, if you were listening to VTF, I would definitely take some stuff off, let it base for a few more days, and see what happens across the board. Facebook, it's a stock that, quite frankly, really I didn't start touching until yesterday. It did gap up, maybe not gapped up, but it was hanging around 28.50. The lockup is today, so we'll have to wait and see. The last two lockups, the stock actually had some follow through to the upside. I think 30 to 31 is my target for year end. That's another week or two. That's a nice percentage move. Looks good, but you want to make sure it holds. I would say minimum, ideally 27, 27.50. You don't want to really give it too much risk, because if it does, it can get back to 25 pretty quickly. So keep it on the radar. It's something that looks pretty good overall. Biotechs look okay. You have the Amgens, you have the Gileads, but not a whole lot for us to trade. REGN, which I know a lot of people love looking at it, but it's a very tough stock to trade. I think that's where we're at right now. We're in that tough market where you're getting quick ideas, getting quick trades, finding your prices, and then seeing what you can do and how you can capitalize on this tape. Not the easiest trading market in the world, but at the same time, trust your prices. Two stocks that I've actually had follow through and held. CRM, very impressive. We were talking about it. Above 161 was the target, was a trigger. Did it on Monday or Tuesday, and had some follow through, and actually it's held up there in a pretty weak tape. So look for a little bit more basing to see if it has some more follow through to the upside. LinkedIn, same type of trade, above 110, 108.19. Had some follow through to 115, a little back and fill, possibly on 110. I'm going to be looking for an opportunity to buy. Some of the Chinese guys are relatively strong. Nothing there. Baidu had a 3-day move. These 3-day moves that I'm looking at either are a chance to sell on the upside, certainly take some trades off. I'm not necessarily putting on shorts, but I'm certainly looking at that opportunity because I think we're in that indirection tape overall. But you got individual issues that you can just try to really take advantage of based on the prices, and that's quite frankly what I'm looking at. Barely looking at the oil stocks, the Schlumbergers, the Exxons. Not really see a whole lot of excitement. You can make an argument that Caterpillar looks good. You can make an argument that IBM, coming out of a little bit of a range, looks good. But if you don't get good prices, you're not going to be getting paid on your ideas. And that's the key. If you don't get good prices, you're not going to be getting paid. So I have, if you have watched my VTF, it has slowly, every day been reducing size, and I've been talking about it and reducing positions and waiting. I'll be the first to jump on the bandwagon if I see some resolution in the fiscal cliff, if I see some resolution and follow through in this tape. But until that point, I'm treading on thin ice. I think the market's treading on thin ice, and you got to trade accordingly. You don't have to be all in, aggressive. I do think the Santa Claus Rally is here. I said it was going to be here for the garbage stocks, for the stocks that, quite frankly, nobody loved. And, so far it's playing out relatively decent. The RIMs of the world, even HPQ, which I don't really trade that often, but I talked about it in the video last week, grinding a little higher. I said Dell's another stock that seems to be a stock for 2013. We'll have to see how that works down in the doldrums, but technically it's starting to look very constructive overall. Well, we're in a unique time, certainly with some of the tax consequences and the fiscal cliff. The normal run-of-the-mill Santa Claus Rally, it's going to be a little disguised this year, it seems like. Certainly that can change on a dime. I think there is an overall bid to the market overall, but excuse me, it's challenging. Let's lastly just close on the banks. Still hanging in there. Best in breed right now, chart-wise, it looks like, Bank of America, even Morgan Stanley had a good-looking chart, broke out a little bit yesterday or 2 days ago from a decent pattern. Possibly can make a move above 1870, 1880, to new highs for the year. JP Morgan, same type of trade, looks decent from an overall perspective. And then you have Goldman Sachs, which quite frankly is just hanging there, top third of its trading range over the last few months. Can't really get that trigger above 121. That will be the trigger for me to really get a little bit longer. I've been in for a few days. Gave you a nice trade 2 days ago, above 117, to 119.50, and now it's just been basing. So certainly you have to keep the banks on the radar. If the banks remain strong, I think the market remains strong overall, and that's where we look for some leadership, and that's where we're at. So overall, Friday probably going to be a little bit of a slow day. Facebook will certainly be on my radar. Apple's always on the radar, and some of the other high beta stocks. But overall, I don't have a whole lot of conviction. Either way, I'm going to let the price action dictate what I'm going to do. So good luck today. Trade smart, and I'll talk to you later.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.